I promise you, this will be the most important video you will ever watch if you're a trader. In this video, I'm going to do a brain dump and I'm going to talk about the philosophy that has led me to becoming a successful seven-figure trader in the stock market. This will be a raw, uncut video, and this is clipped from the coaching session over inside my mentorship group. And this is going to be based off of my opinion, my experience. I think some people get into the market and they think that more opportunities is going to mean more profit, more money. More trades means more money. I mean, this is something that from a psychological perspective, a lot of you are going to struggle with, which is when you do not have a trade on, you are going to feel this need to put on a trade. And that is simply because if you don't have a trade on, there's no potential to make money. As soon as you have a trade on, you have this potential to actually profit. And so psychologically, what traders do is, well, try to put on a trade. If you don't have a trade, you try to put that trade on or a trade on. However you could justify putting on a trade, you will do that because that means that now you are in a place where you have an opportunity to make money. That is not what we want to do. Now, when I approach trading, the way I approach things is quality over quantity. That's like the easiest way to put it. I am looking to optimize my trading system as a whole. As I try to optimize my system, I want to squeeze the most profit I can out of each and every trade, out of my whole system. And by narrowing down those opportunities, say I have 100 trades and I narrow down that 100 trades to maybe 10. And those 10 trades were the quote unquote like highest quality A+ setups, however you want to put it. They're going to be those that subset, that 10% of trades that I would have just made exponentially more if I had only traded those. Yes, I have 90 less opportunities. Arguably like 60, 70% of the time I won't have a trade on, right? Because I have that many less trade opportunities. I go from 100 trades to 10, but that set of 10 trades, they're such high quality because they're optimized. I know that for whatever reason, those trades that I'm looking for, like I said, whether you want to categorize them as setups or your A+ opportunities, whatever it is you're looking at from a technical or fundamental perspective, when you narrow things down and you find those highest quality trades, those are the ones that you would have more than likely made the majority of your P&L on. That's the whole idea is like you had 100 trades, 10 of those you made the majority of your P&L on. The other 90, you just kind of traded up and down, up and down. Just for an example, right? This is very hard. When you get into the market, when you guys are coming into the group, we have, new people joining every day. The idea, and I think what's been taught and what people have seen on the internet is, trading every day, all the time, maybe all morning, maybe all day. And the opportunities or the frequency of opportunities is what someone will think is going to make them money, when really that's not the case. From, again, what I've found, and I've done a lot of trading over the last 8 years, and I've got a team that helps me do this. What we found is that when you really actually want to optimize your trading, okay, we'll call it system, and you actually start to narrow down on where the majority of your P&L, of your profit is being made, you will see typically 4 or 5 times, or let's say, call it, 80% less trade opportunities. And that's fine with me. But it's something that you guys have to understand and you need to be fine with is, hey, I'm going to take less trades. I'm not going to be in trades all the time. But the trades I take, they're going to be higher quality, they're going to be better trades, and I'm going to make more money. So why take, the time to bother dealing with another, 10, 20, 30 trades within the course of a year that are ultimately going to result in like a flat equity curve or a flat P&L. So when I'm optimizing the trading I'm doing, I'm looking for consistency, I'm looking for growth over a period of years, okay? Are we all following? Because this is super important. And if you're looking at trading, in this way that I'm kind of explaining how most people get into the market and they think that more opportunities means more money and they need to be in trades all the time, you're really going to struggle. You're going to struggle for years more than you would have. And I'm trying to be a mentor. That's my goal here. So again, this is just based off of my experience, but I've seen it remain true like year over year and with a lot of great traders I've spoken with. Are we following? So again, just to summarize, I look for those A+ opportunities in the market, and there's going to be less. There's going to be less of those. I've optimized my system for consistency, and that will bring me into my next topic, which is like consistency. Now, you can have massive winners and massive losers. So let's think about this as like kind of the spectrum. We've got really, really big winners on the top. We've got really, really big losers on the bottom. And as you kind of narrow that or tighten that range, you decrease how big your winners are, but you also decrease how big your losers are. And I'm looking for that place, I guess, where those, how do I explain this? Those lines would intersect where, I've optimized for not just the most profit, but the most consistency with the least drawdown. Okay. I've seen traders have, and I've looked at like plenty of people's performance, guys in the group and just traders I've spoken with. If you look at your equity curve, right, it should go from like, well, I guess it's going to be opposite. So it should go up, right? We should be seeing our money go up. If it's, up, down, up, down, up, down, and, you're not really making any movement and actually not really, making money, right? The equity curve is not going up. Then you're not, at the end of the day, you might be making a little, but that growth is going to be very slow, which is not a bad thing. But what I see in the most cases, it's not that. It's big spikes. It's a lot of up and down. It's huge winners, huge losers. And essentially, that'll look pretty much like a flat equity curve, like a flat line with big spikes in the middle, kind of like a heartbeat. That's kind of what I've seen a lot of traders' P&Ls look like. Is if you looked at like a whatever it is, I think in a hospital, how they have the heartbeat thing, you're kind of up, you break into the profit, and then you're back below. I don't know if that would mean you're dying if your heart rests or your resting heart rate goes below the line, but you get what I mean. We're going, we're going up, we're going down, but we're trading along this line, which is essentially flat. Big spikes off of this line, which is essentially flat, up and down, but really never making any momentum, any like growth, and no, that consistency overall, and that equity curve that we'd like to see. I don't see that often. And so that's what I optimize my trading for, is that consistency, that strong, positive equity curve with little drawdown where I'm inching my way up. And a lot of the times also, I've seen when I've optimized someone else's trades for this, and a lot of that comes down to risk management, but it also comes down to the way you're trading, you're identifying your opportunities, your edge in the market, how you're managing those positions, right? There's a lot at play, but that is always what I'm optimizing for. Is I want to see that consistency with as least drawdown as possible. So you want to be able to build this cushion and maintain that P&L. You don't want to give back, and not be able to break out, right, and actually start making profit. And so when someone comes in to the mentorship, that's where I want to see. Most people come in and they're losing a lot of money, but what I want to see is, we make that progression from losing a lot, losing a little, trading flat, making money, and squeezing the most like out of their system as possible. And that is where, I guess I don't need to share my screen. That is where, I'm at, obviously, is squeezing the most I can out of my system. Okay. I'm squeezing the most I can out of my trading system as a whole. I'm optimizing, and I am personally optimizing for as much consistency with as little drawdown and obviously as much profit. So it's kind of like three variables: consistency. I hope that's not too loud. They're doing construction outside, but consistency, again, we want to see that like positive, steady equity curve with little drawdown. We don't want to see massive drawdown in our P&L. We want to hold that profit, and we want to obviously optimize to make as much profit as possible at the same time. So a lot of that boils down to risk management and actually making sure that you're position sizing. Now, position size is going to have the biggest variable on your profitability as a whole, on whatever your equity curve looks like. It's going to be that position size. That's why I spent a year building a risk management calculator that you guys have access to so you can properly position size. Whether you're trading, more consistent, based off the way you're trading, I mean, that's obviously going to vary a bit how you're determining your position size, but what is taught in the masterclass right now, you're going to obviously be approaching trading with going into each trade. There's going to be, based off the trade, some trades you'll make more, some you'll make less. That risk to reward behind the trade is going to be, varying. We're not going into every trade with the same risk and the same reward. Each trade is going to present different risk and different rewards. So therefore, we have to position size. We have to adjust that accordingly, unless you just trade a consistent position size. So there's a couple different ways to approach the risk aspect. That's where the calculator comes in. And then at the same time, obviously, okay, how are we figuring out what stock we're trading, what direction we're betting on that stock going, right? Are we betting on that stock going up or down? Are we going long, short, buying calls or puts? And then how are we managing that trade? Where are we getting out? And I've done, extensive testing on letting your winners run as far as you can and cutting those losers really fast, stop loss and take profits based off of P&Ls, algos, indicators, moving averages, you name it. Like, we've done everything. And the biggest thing is having it's like everything works to a certain degree, but not if all the pieces to the puzzle aren't aligned perfectly, right? So I'm not saying like technical analysis doesn't work if it comes down to how do I find out what stock to trade and what direction do I think it's going to go and where do I get out for a win or a loss, or fundamental analysis, or order flow, or you could name any type of trading. They all work to a certain degree, but again, every piece of the puzzle needs to be aligned and everything has to work together as a system. So focusing for me, knowing that is the case, when you have a set of data, my goal is to look at as much data as possible and make those data and analytical decisions, right? And make those projections into the future. So I'm taking 3, 4, 5 years of historical performance based off of that exact trading strategy, exactly how I would have managed the trades, how I would have found them, etc. And then I'm projecting what that would look like over the next 2, 3, 4 years. So there's a lot that goes into trading professionally, right? And most everyone that's obviously in the group right now and listening, this is probably a hobby for you. You're not trading professionally. A hobby is something that costs you money, right? So if you're losing money right now, trading's a hobby. And the goal, obviously, is to make money. And the hardest thing, like I said, kind of rewinding, is you get into the market, you want to make money, and the emphasis is on making money. You end up wanting to put on more trades because that is your opportunity, and that is where you have the potential to make money. And this is where most people go wrong. Right in the beginning, right off the start, right out of the gate, this is where most traders will, make these mistakes. Most of them are correlated to that idea of coming into the market and wanting to make money and wanting to make it fast, right? Are we all following? This is just like something that I was just thinking about on the plane that I just wanted to share because this is going to be so important. I want to see you guys do well. I really do. And this is just so important to understand and really just drill into your mind, right? So we will keep an eye on the market here as well. Last thing I want to talk about on this spiel is patience. Patience is one of the hardest disciplines in trading as well. One of the hardest things to do is be patient. Like I said, part of that is just being patient and only taking those very quality trades. Maybe it's one a week, that's fine. But you have to approach trading, okay, when starting out, but throughout the whole time you're trading, whether you're a year or 3 years into it, you need to mentally put time on your side. So you're not supposed to start out. Let's just put it this way. Whenever I put a P&L goal for myself, saying, hey, I'm going to make X amount by this date, it never plays out. I don't think once have I set a P&L goal and, chosen a date and been like, I think or I'm going to make X amount by this date. Trading is just not like that. I've made the most when I'm not expecting it. And so you need to approach trading with a longer term horizon, a longer term view, a longer term outlook. You can assess your performance on a weekly basis. You can assess your performance on a monthly basis. Okay. You have to look whether it's 100 trades at a time or at the end of the year. That is what you always have to remain focused on. It is this level of discipline that I'm telling you, 99% of students that I've worked with just don't have, because it is really hard, right? I know it's really hard to be patient. It's really hard in life in general to be patient, especially in trading, because you want to make money. And when I say, hey, look at 100 trades at a time, you might not make money for the next 6 months, but at the end of the year, you're going to have made money. It can be discouraging, right? It can be disappointing. That's a record high on SPY, 606.21. That's crazy. It can be disappointing, right? To be kind of sitting on the sidelines, watching the market, whether the market's going up or down, and you'll start to try to, like I said, justify opportunities and, hey, maybe I should put on this trade because you want to make money faster. You have to approach things right now, get it instilled in your mind that you might not make money for, a month. Like, you could go an entire month without making money. You have to be fine with that. You have to be in the position where you can do that. Don't transition to trading full time unless you can go at least 6 months without making money. You should have a cushion built up. And at the same time, your performance cannot be assessed. You cannot start getting in your head and thinking, oh, this isn't working. Oh, this is too slow. I'm not making money fast enough. I should try something else, because it's been a week or a month or 3 or 4 months and you're not seeing the progress you want. You really have to look. I don't know just based off the frequency or how many trades you take or the opportunities, I don't necessarily love saying 100 trades at a time. I think looking at the end of the year is going to be just a better place to put yourself mentally in. You could go 6 months without making money, and then month 7, you make 50 grand. Okay. And then you say, oh, if I disperse that over the last 5 months, I would have made X amount a month. And that's really how it is. I mean, there's not going to be that exact consistency each month. The majority of these, successful traders I've spoken with, and myself personally, we're going to make the majority of our P&L in 2 to 3 months of the year. So 2 to 3 months of the year, everything's going to align. Whatever we're looking for, the market, the conditions, everything correlates and lines up to where we have a very, very strong 2 or 3 months. We're going to make the majority of our profit in that 2 or 3 months. We could have gone the entire year trading slow, kind of trading flat, and then those 2 or 3 months, you might make a ton of money, and you just made your whole year, and then your goal is to obviously keep that. So maybe it's in the beginning of the year starts out really strong, January, February, you absolutely kill it, you're up like 30 grand, and then, March, April, May, you just trade flat. And your goal is to not give back what you just made. So it's preserving, when you have those big green months, preserving that capital through the end of the year. So you're green on the end of the year. And then starting out realizing that maybe you'll have a month where you're flat and you don't make money. That's fine, because the next month you just made 10,000 and that would have made up for the previous month, and now you're 5 and 5, right? So you got to look at it that way. But by having a longer term horizon and outlook on trading and being patient and knowing that, hey, whether those 2 or 3 months are going to be in the beginning, middle, or end of the year, maybe that'll be January, February for you, maybe that'll be August, September, maybe that'll be December, wherever those very big months for you line up, you have to be patient in getting there and then actually preserving that capital after you've made it. Okay, that's the consistency, that's the patience and the discipline. There's a lot again that comes into play. If you don't want this to be a hobby, then you have to instill all of what I just spoke about. You have to understand this. You know, most all professional traders have psychologists. They have like actual coaches that work them through all of this, right? This is what I'm trying to do for you guys. The best traders in the world pay hundreds of thousands a year to have, psychologists and coaches on their side for performance, because this is a performance-based job. So they have performance coaches in different areas, whatever that may be. Risk management and psychology is one of the biggest. To obviously trade at the highest level possible as a profession. I'm saying like hundreds of thousands a year for coaches and mentors. And so again, that's why I'm here doing this for you guys and taking the time, because you got to understand all that. And I'm going to clip this. I'm going to put it in the recorded sessions, and you should go listen to it again. Instill all of that into your mind, because I don't want this to be a hobby for you, but it will be until you understand everything I just talked about. I hope you guys enjoyed. If you're interested in learning how to trade and finding that consistent profitability yourself, click the first link in the description below. You can join my mentorship. I will work with yourself, and subscribe for more. I will see you all in the next one.